there's all kinds of ways to start a business these days. You could start a business, you could start an agency, you could start a solopreneurship, making your own job. You can make a software company, you know, an integrator shop, IT services shop. You can do all kinds of things. I distinguish in the software world, where I come from, between the very few that should take VC funding and where it's good odds for the founders or it's worthy of the bet, and the rest of the majority of founders that I call practical founders that shouldn't be taking VC funding. The world has changed, so that's another thing I'll be talking about today. So I define practical founders as the ones creating valuable software companies without big funding. And I'm not against funding, but there's a whole world in between the religion of developer bootstrapping their own solution and getting it up and running and the big VC funding thing that we read about. And there's all kinds of ways to do it in between. So just a bit about me in the context for what I'm going to describe here and my insights that I think are not obvious or at least not common in the world, unless you're talking to people who are in the game and doing it for a long time. 30 years in the software business, grew two companies to 100 million, and another company there. I started my career here in Dallas and was in Phoenix. These days, I'm a paid advisor, and I'm, to 40 early stage practical founders. I run CEO peer groups and work with the founders. I was on calls this week with 24 founders. So I'm nitty gritty inside a ton of software businesses and help out there. I run a podcast that comes out every week with founder and expert interviews. I'm pretty big on LinkedIn, where I'm writing every week, and I've been curating a list. So these days, I'm not running software companies. I'm helping founders. So, and I'm an instigator and hyperactive in the ecosystem. I'm not just hanging out here, and I'm talking to founders all over the world every single day. It's really fun, and there's a lot of great things going on. And some things have changed in the world, and some things haven't. So, there's a lot of hype in the startup world and SaaS world and funding world and all that. Startups are cool, which is ironic because they're really brutal and they generally don't work. We'll talk about that. But the hype of, hey, it's cool, and who's going public, and billionaires, and Elon Musk, and everything. There's a place for that in the world. That's really cool. It's just, I don't know if you know this, 1% of 1% of the VC-funded software companies, tech companies, actually turn out to be those billion-dollar shots that we all hear about and invest in our 401ks and so forth. So it's another one of these areas where follow the money. It's taken over the whole conversation, even though it's not really the productive reality for what's going on out there. So I'm going to talk about the myths, the realities, and lessons. I'm going to go through 5 of them: 5 myths, 5 realities, 5 lessons for each one of those that some of you are going to recognize. And early stage founders might be surprised that somebody's telling you as clearly as I will what somebody's been doing a long time. This is not I'm not creating any new laws of nature out here for in the software business or otherwise, but it's not what you hear when you show up at a university in the entrepreneurship system in an incubator, or go online and read about startups. There's 2 different worlds there. So I'll just jump right in here. Again, we'll do a myth, a reality, and what to do about it here. The first myth is startups are cool and they all grow up, and congratulations, you've got a startup. Startups are experiments, and most experiments don't work. Whether you're trying a new marketing program or have a new company or something, it's the odds are against you. Most startups fail outright or get stuck, and that's the common thing. There's literally hundreds of thousands of tech startups every year, and there are fewer than 15 that turn out to be billion-dollar success stories. So we'll talk about this here. So the first thing is, when you got a startup, it's going to be hard. That makes the opportunity, interesting. It probably won't work is actually the game here. So experienced people know this, and people have done it before. People in the game, people keep track of the game and the software space. It probably won't work, but there's a chance. So I'm not, first of all, it'll be hard. And don't let anybody tell you that it's not possible to go create something useful and thread the needle and make a serious company. There's definitely a chance. If I can do it, anybody else can do it here. And some entrepreneurs actually do it. what I think is people aren't telling the rules of the game that increase your odds as a startup founder or somebody on the field and help you get through the hard things that you should be getting through. Mostly it's hacks and quick fixes and funding drugs and so forth. So I, I talked to university students about this game and about entrepreneurship and so forth. It's way harder than you think. I was just saying that in my peer group today, 8 founders, 2 of them had brutal, brutal months, and we talked about it. And everybody else has had those months where everything else went to crap, and they didn't give up. They keep going there. So there's an unusual, it's easy to say perseverance and grit and so forth. Everybody's got their superpowers, but um, get ready for a long, hard ride. If you can keep up with it. Startups are just not normal. That's why they're cool. There's entrepreneurship to create a business. That's cool. And it's pretty common. Go start a restaurant or an agency or something like that. But startups are things that you start small that could be quite big someday. That's why startups attract funding and restaurants don't. Same kind of way. And there's something sexy about startups these days, but they're clearly not normal. Like we know 90% of the people in the world are not going to quit their job and work for years and be really frugal and find a vision and, you know, keep going at it 10 times. It's totally not normal. Most people want a job, they want the easy button and the rest. So startups are for all of us. So welcome to the program here. We're the freaks, the fanatics, and the fighters that are gonna, we're the instigators. We're gonna change something. We're gonna create a little revolution that's in some corner of the universe here. People aren't doing it today, and someday they'll do it. It's just abnormal. It doesn't mean it's bad, it's or good or crazy, better or worse. It just means it's not normal. And to be honest, that's actually where the opportunity is. Normal people are going for jobs and trying to, I don't know, hack their way, working from home and not working all those days and so forth. But, entrepreneurs are the crazy ones in the startup world. So, um, if you go to whatever startup conferences and incubators, you find all the people that are just getting into the game. They're all excited and trying to act cool. And if you go around the people who've been done it a long time, they're seasoned, gritty, folks that have doing the zigging when everybody else is zagging. So again, it's not rocket science. It's not impossible. It's just not normal there. It takes some fanaticism here. Like I don't even have to do this. And I'm talking to 500 founders a year and helping 40 founders. Like, it's not normal to go personally curate a list of all the software companies in Dallas so other people could see them and we can bring the help, the talent, the money, and the rest to those founders and show that there's more going on here that, I did that without anybody asking me and so forth. So, that's my version of fanatic, and it's great to be a fanatic. This is part of the problem with, young people figuring out they're the only one in this big classroom that's looking around going, isn't this, I got a different idea of how the world should work, and I think I'm the only one in this room, right? And, apply your fanaticism to solve the problems. The crazy people, fanatic teams are ones that change the world, of course. So the myth number 3 here, I'm happy to talk about other misconceptions here in the Q&A or dig into any one of these here, that, you have an idea and you get startup funding. A few years ago when funding was peaking for software companies and tech companies, now it's starting, and I don't know if it's peaking yet for AI companies of all flavors, at least the platform companies. We're all using AI as a feature, I guess, in software. But um, folks I've talked to hundreds of folks here in Texas and say, I got an idea, now I'm looking for funding and I don't know anybody, and how do I play this game? And it's just a weird expectations. Meanwhile, all the angel investors and the funders are waiting for you to get into revenue to get a flywheel going with a business to see if it's fundable, and it's not required. It's not even common. Half of the companies on Greg's list, half the software companies that are live, active, and real in Dallas do not have any outside funding. So, and it's just about 22% have some institutional funding, private equity, venture funding, and so forth. So, like even in Silicon Valley, not all of them have outside funding. So, it's just a misconception that startups always start with funding. It's required in what you do there. Uh, it's not even true that it makes it easier for founders to go do the work and learn and pitch and get through it and to go get investors. It's generally easier to go get customers. We'll talk about here. So very few startups are funded by VCs. So VCs is the big time thing. Most startups are initially self-funded and sales funded and coming out of an existing company. Practical funding to get it going. Don't quit your day job, 2 jobs, all that kind of stuff. Code it in your spare time. Invest some people out of your services business. Uh, get it started with sales. That's how most companies start, including VC-funded companies, because they're not funding you when you have a PowerPoint and an idea. They're funding you when you have some customers and it looks like a rocket's going to take off. So that's the reality there. So this is kind of a dose of cold water for some startup founders that say, I've got a cool idea, I know it's going to work, and got to get some angel funding. And I say, well, how about you don't quit your day job till you'll have 10 customers. So this is a story that's very common on the Practical Founders podcast is how did you get this thing started? And none of them, of the 100 founders I have on the podcast, average equity value, company value, founder equity value, whether they've sold the company or not, is over 50 billion for these people, which is worth more than the VCs. And they didn't do it starting with funding. So if nobody's told you this, this is actually easier than going to get funding, in 90% of cases. Of course, there's some exceptions. I actually played the VC funding game for 30 years, and I've won and I've lost, and I get it. The world has changed. It's not the same world anymore. You don't need VCs to code your software and get customers. You don't need VC funding to go to market. If you grow a 5 million ARR, annual recurring revenue SaaS business, you could sell it for 25 or $50 million even today, and be worth more than the VCs that turned you down. So it's about getting customers. We're back to the good DNA, customers, and solving a problem for somebody who cares about it enough to pay you is the game. And turning that into a business where teams and more customers and can be an efficient engine for solving problems in the world that people will pay you for. This is the benevolent capitalism game here. And it's easier than ever to get into market with customers, to build a product that customers be interesting. It's harder than ever to grow a software company. You can build a product, but not every startup grows to infinity. And then when you get some customer sales, you say, I got the thing, I'm off, this is exactly what it is. It's the usual delusion when you're trying to raise money. I got 10 customers, so I know it goes to infinity just like that. Well, it's a constant zigzagging game. When you get your first customer sales, you don't have, quote, product market fit. It takes a lot of tuning in, really, mostly years and getting to $1 or $2 or $3 million in revenue before you can say, for these particular customers in this market that have this specific problem, our product doesn't solve all the problems. It solves that specific problem amazingly well. We can find them and reach them in a certain way, and now we've got a business. So it's about narrowing in and playing the focus game to get to product market fit where you can scale a business. So customer sales gets you started and funded. Product market fit gets you growing and scaling. They're two different things. So, I just is underestimated here. The standards are really high these days for people to stop what they're doing, pay you, stop something else, buy your software. It actually has to be amazing enough for them for that problem. Not every problem. This is the benefit of startups. Amazing enough for a specific thing that you're solving for them. A great freaking product, will scale. So mediocre stuff, being everything to everybody won't scale. Being amazing for someone specific. Solving something important for someone specific. It's hard to find, and it's tough to do, but that's the game. It has to be kind of amazing to keep going, and really amazing to be a rocket that you throw VC funding rocket fuel on. So I just want to raise the standards out there. People don't want your software. They don't want to read your blog post. They don't want to read your social media message unless it's amazing and specifically important to them, hitting them between the eyes, which means the focus is the force multiplier, and the old thing is true, we won't change unless something is 10 times better than what it used to be for us. So I think people are a little bit over in businesses of, oh, we just need more software. That's the answer. I think people have consumed businesses have consumed enough software that they're all slowing down and skeptical, and reality is setting back in, which is a good thing for practical founders. The last myth here, just in talking to so many founders here, like I just have to explain this to people. Uh, you can build it. I guess there's probably some stories where people build it, shipped it, and then it spread. Um, but they're not that common, and the products don't, the product actually has to be designed to sell itself if nobody else is in the room. It takes some sales, and most software companies are B2B sales, and uh, you know, all the little problems are solved. So you're solving a more advanced problem and charging a higher price point and so forth. You're generally talking to people in the B2B sales, business to business sales. So yeah, you have a great product, but you got to figure out how to sell it. This is the biggest thing when I ask technical founders, what is the biggest learning after your long journey selling the company, starting it, coding yourself? The biggest thing is I learned how to sell, and we became a sales organization that helped serve our customers and deliver our products. So the revenue growth game is the hard part of the software business. Building software is hard and it's complicated and all that, but it's figure outable. Getting customers revenue growth is still the harder part of building your business than building the product. So there's multiple hard things there. You're already used to doing hard things there. Um, 9 out of 10 founders, up and running founders, have enough product to sell and not enough customers, revenue, and growth. And so they go together, but the revenue growth game is the hard part. And the smartest technical people I know also say this. It's the sales game and, all that. So get great at sales, whether that's a marketing oriented sales for a small product or a B2B sales. And here I am selling you on these concepts as well. Find a way to get great at it. It's figure outable. Not everybody can learn to code, but everybody can learn to sell, and wrap your head around it. It's about sales, and especially when you have an opportunity to go create something without VC funding, because you can. Sales becomes your customer funding. So this is how you know, get another developer as you sell enough new customers to pay for somebody else on your team here. So it's your sales growth rate and sales momentum and all that is basically what creates the how much your company is worth as well. It's not how many lines of code or how many people you have or how cool your office is. It's your customer and business trajectory there. So just a reminder here, it's really kind of a tough business for the crazy people solving real important problems in great ways and convincing the world to do something they haven't done before. These are it isn't about funding, it isn't about looking cool, it isn't about playing the game. It's about doing what normal people won't do to go solve these problems. So I wish more people could hear that before they get started on the journey and know how hard it is. It's a lot like climbing Everest, except the hard part in Everest, which is the last mile up the hill where the wind's blowing and there's no oxygen and it's 4 below and everybody dies, all that stuff. That comes early on with software companies. You get started and all of a sudden, they get going. Once you get a company to 3 or 5 or 10 million in software, the fly in SaaS with recurring revenues, it's going to more likely to continue on, which is why everybody with a 1, 3, 5 million recurring revenue software business is getting daily emails and LinkedIn requests from investors and people want to buy their company. Getting the flywheel started is the hard part, the 0 to 1 problem. And for the crazy people, that's like us, that's what we get to do. So once you get a little business going, the leverage isn't in funding, and stop thinking that. The leverage is inside your business, making a great enough product, finding a good sales tactic, being frugal and efficient to solve these problems. It's not from outside funding. So I'll just skip over that and just get to the last thing there. All of you are welcome to go to practicalfounders.com and download the ebook. So here's another reality for you not seeing. we see the billionaires and Elon Musk's and Mark Zuckerberg's. We don't see there. I know a dozen people in Dallas here who are founders who did the quietly worked out of their home and the office that didn't have their name on the building. Nobody knew about them, and they grew in this crazy little corner of an industry, and were really frugal and did it quietly and got punched in the face and got back up and kept on doing it, and then sold their companies for $50 million. It's happening all around you. If you sell your company, if you're a sole founder or you still do founder, you sell your company for $50 million, you're making more money than 99% of the VC funded founders, including the successful ones. You didn't have to divide it up with anybody. You did it your way. So there's all kinds of success paths, from run it forever to get it to a few million and flip it, to sell it to a strategic company, and all kinds of ways to do it. It isn't just go public, which I've done before, and with a company I helped start. So there's all kinds of ways in between, in the messy middle between bootstrapping and all that. So I'll just zoom out here and turn off the slides, and then we'll go to questions and answers here. Was that useful? Did I paste that enough there? Was that good?
That was perfect. And let's just all thank Greg for a great talk. We'll do some virtual round of applause. Yeah, that was awesome. I got a bunch of questions. I see David's got a question, so I won't hold him up. David, go ahead.
No, sorry. I was just trying to do the applause thing.
Oh, trying to.
Yeah.
That's good. All right, Austin, do you have a question?
Yeah. First, I really appreciate you doing this and even being willing to take my questions.
Yeah.
So I have a couple questions.
Yeah.
That I was kind of just writing down while listening to you.
Yep.
And it's kind of just specific to what we're doing right now. So basically, we've gotten some interest in two of our products from two fairly large companies, one of which is public and the other is about to go public. And we're just finishing up the MVP stage of it. So the first question I have is,
so
does
you've got
that
an
validate
interest for a software product you're creating to be customers of yours? Do they want to buy the software and use it?
Possibly, yeah. So basically one of the I'll just flat out say it. One of the companies are Sunrun Solar. I don't know if you're familiar with them.
Nope.
So they have gotten some interest where basically a large portion of the East Coast offices are kind of interested in investing in the product. So the first question I would have is
buying your product or investing in your company.
What's going on? The managers want to invest in it and then sell it to all of their workers in the office, which is a couple hundred salespeople. So the question I would have is, does that validate the MVP? In your opinion?
Oh, good one. Yeah. Well, I just wrote about MVPs on LinkedIn this week, so you can go to my profile and see what that is. In the other comments here, MVP is not very clear, and it depends, and so forth. So I would take that as a good sign, first of all, that somebody cares and there's an important problem they care about. And if they're like, yes, let's do this, and they want to throw some money at it, that's a good sign. So and 90% of people with an idea never get to somebody at the other side says, get out of my way, we're going to move this stuff and we're going to start this. So congratulations, you've got some interest there. So you got to keep validating, and it's the old joke about how you celebrate a sale 5 times. You celebrate it on the handshake, I'll take it, and then you celebrate it on the PO that comes over, and you celebrate it on the sending it over, and the implementation, the cash. So I would follow that trail. That's a good sign for you. I don't know why you need more validation than that. Like you're trying to get investors and you need to prove something, or I care about you. I don't really care about potential investors. So that's a good sign. Follow that. And I'd be thinking, are there more people like them? Is this a pretty common problem? See, I didn't ask you all questions today about your situation. I just went in and said it. Startup founders, I know the swim lane. So, those are a few things there. But I'd say that's a good sign.
Cool. And then another question I have is, when does it even really make sense to raise capital? So we've had some, luck raising capital from one of my business partners for a business we were working on that was not tech based. And so then that prompted me wanting to understand, like, does it make sense to chase raising capital outside of venture capital? And I bring it up because, in my opinion, a concern I have is that I could take what I've developed thus far, which is really just, a bunch of agents working with one another and a really large corpus, and I go to a venture capitalist, and they're just gonna, maybe think the idea in itself isn't all that great, whereas perhaps someone outside of the industry, within the industry that's not tech based would be like, wow, this solves my problem. Let me give you money. Like, does it make sense to pursue one option over the other, and why?
It always depends, and there's good reasons I can argue it all different ways here. So let me argue it this way. First of all, if you can get a customer and you can get revenues, and you don't have to ask for permission from a VC, and you just go do that. That's 100,000 in revenue is 100 times better than 100,000 in somebody else, a check from somebody else. And especially if it keeps playing over year. So just go do that, just chase that. And stay as frugal and efficient as possible. It's like the funding game is like the opioid crisis. I got a little pain, and should I take these pills? My doctor's saying I should, and they're addictive, and they're going to create problems. It's just really dangerous, and it wastes a lot of your time, and I would stay away from it. If you went to serious VCs, and I know a ton of them, I know hundreds, we talk all the time, they would say, well, come back when you get to 200,000 in total revenue, and then we'll look at what's inside there. So don't even bother right now with them. And if it's not kind of a template-y business, meaning all software and a certain kind of margins and no services, and fits the template, because they got a pretty narrow band what they can invest on, like that they can win. So you may or may not be the template, like CEO. Are you the kind of guy they would invest in? The second thing is there's all kinds of, let's say rich uncles and quote angel investors running around there. You're going to waste your time with them too. Just go sell something. The one place you could consider this is people in your industry who've made money. And you show them this thing and they know about the problem. VC is going to be like, I don't know that problem. I don't know. Wait till go get $1 million and prove that there's a problem, right? Somebody in your industry knows that there's a problem, knows your solution. You're talking turkey to them. They can jump earlier than others, and you can get a pretty good deal. You're beholden to an investor. Student debt is a kind of a thing. Like, it's a lot like going to college and getting student debt. Looks kind of easy and looks kind of free and everything, and then you realize it's kind of heavy, and you can't get out of it, and all of that. So, if anything, stay practical with investors who like you. Like, by the way, and it probably won't work, but there's a chance they know that. So they want to say, Austin, gosh, kid, this problem needs to be solved, or you think you can do it. I think you got a shot. Let's give it a try. I believe in you, kid. That's pretty much, the extent of what you should be signing up for.
Awesome. I really
great
appreciate
questions.
it.
Thanks, Austin. Yeah, great insights, Greg. Anyone else have questions? Feel free to drop it in the chat or just come off mute. So I've got a. Oh,
okay,
yeah,
go ahead. Yeah.
Yeah, I've got a few. So I guess I have a wide spectrum. I'll start with, let's see. Yeah, I'll start with a tactical question and kind of like your experience of working with all the practical SaaS founders and whatnot.
Mm-hmm.
What does the early stage sales typically look like? Is it just the founder doing a bunch of outreach? Is it, writing blogs? Is it, outsourcing it? Like, what does that typically look like?
Well, it depends. But what I can say it's not is let's go raising funding to get some salespeople for a product I built that I don't have any customers yet. It's not that. So let's stop that. And most software companies, 90% of software companies on Greg's list or anywhere are business to business software companies. So, and then it depends on your price point. If you're selling something for $100 a month, it's marketing led. and you don't really talk to them. If you're selling something for $300 a month, it's marketing brings traffic and they sign up for a demo and you talk to them and it's inbound oriented. The higher the price point, the more it's outbound in your industry. Okay, so, and generally speaking, you heard it here first or last or again, it's founder led. Most times the founder is going to sell the first $1 million in business. So figure out how to sell. I guess I didn't clear there. So founders sell and figure out how to sell. And this is a very common problem. All the $1 to $10 million software companies in my groups this week, they're all saying, I can sell it. And then I hired a sales guy and doesn't sell it as well. How do I figure this out? And I had to fire another one. I got a VP. So just the first thing is, I mean, if you can sell something and sell it again and sell it again as a founder, okay, you're onto something. And that is remarkable. That's not normal behavior. That's good. And founders have superpowers in knowing the problem and speaking about the problem and selling the thing and all that stuff. So it almost never works for the technical founder to hire a sales guy later or gal to go sell it. It almost never works. And it's sometimes worked to be the sales founder that hires the technical person. But in that revenue versus product game, right? The getting revenue thing is the harder thing. So, and then it depends. What's your product, your business, or the rest? There is a way for founders to go sell something. And sometimes it might be blogs. If you're the industry expert, I get 5 million views on my LinkedIn posts every year. I don't need money to go get marketing. I got an audience because I'm an expert and I'm sharing good stuff and so forth. That's just one way to do it. So it depends. And there's sometimes a superpower. All the normal sales and marketing tactics are beat to death. Anybody who could buy software, a dentist or a marketing manager or whatever, gets pummeled with inbound. Hey, you want to buy my software, my new AI tool, and all that. So you have to find a way to get around in there, and that's part of the trick there. But generally, I would say founder-led sales.
Yeah. Okay. So founder-led, and I really like that insight about the price point. If it's a high price point, then one-to-one outbound makes a lot of sense. If it's a low price point, the one-to-many marketing strategy makes a lot of sense.
Yeah.
So
just because of the business model there, like you just can't afford to have salespeople if you got certain customers. You got to sell too many. So
yeah, it makes sense. We got a question from Stacy. Sales is maybe easier said than done, right? How do you get the first sale? What do you suggest is the way to approach this?
Well, if you want to go to the Practical Founders podcast, and 3 podcasts ago, I had software sales expert Matt Wallach talking about this kind of thing. Some insights there. But the first thing I would say is don't view it as, selling, meaning you got to get the order and somebody needs to pay you and everything. You should get the hang of that. But your approach should be problem solving. You got somebody in pain and you have the antidote, you have the pill, and you can help them out and so forth. So I would say, there's all kinds of great sales books and videos and the rest. This is all figure outable. And it's even figure outable how to code and everything. In my peer groups, we don't talk about like what is all the content, what is the best metric. All that stuff is available. We're not talking about teaching people these things. You can go find it out. So you can learn to sell there. But I think if your perspective is I'm here to help you guys, right? And if this were more of a conversation, I'd find really where your pain points are and we'd aim right at that. And I'm sure it could help and all that kind of stuff. I'm not selling you anything today, but most founders say, I waited too long before selling. This is the MVP game. I waited until it was perfect in my mind, and then I got out there and realized I was half wrong, and I spent 6 months too long. So go early. Taking that into account is a lot of founders say, don't even build a product until you have 20 people lined up to buy it or consider buying it, or they're excited about what you're going to build or whatever. Some people say higher, lower, whatever, but that's the harder part. I would literally not code until I had talked to 100 people and figured out 20 people that had the problem and defined the problem and told them, if I build something that looks like this, if you pay money like that, and and find a way to validate that. So sell before you build is even better.
Yeah, I really like that. Let's see. We got another question from David. How do you figure out pricing for enterprise products for large corporations?
Well, that's a very complicated world, but generally it's not so complicated in the big thing. So you could do it if you're competing in an existing market. There's all kinds of comparable type solutions. You're starting with relative pricing, and meaning you can't show up 100 times more expensive, or probably not less expensive than everything else that people are buying today. And being cheaper isn't always better, but sometimes that's a view. We're going to see a lot of that in the AI world. You don't have to pay what you're paying for Salesforce. You pay, a tenth of the price for something that's, 80% of what you need and all of that. So, so that's one thing, is just the relative price in an existing market. If it's a new thing and people aren't used to it, then you can price more aligned, and this is generally a better deal, to the value that you're creating. So you got to sell to say you got this problem, and what is the impact in your business? Oh my God, it's costing us $1 million to screw this thing. Well, I'll only charge you $100,000 per year for that. So that's ballparking in there. We still have these proxies for usage and value called user pricing and transaction pricing and additions and all that. People are kind of used to that. It's just kind of a precedent with that. But it all depends there. But the first question is it a thing they know about, or is this a new thing to them? By the way, it's a new thing when you say, hey, I got this thing and it solves this problem in this way. And do you have one like that? And they look at you like, what is that again? Like all the stuff that exists here, podcast mics and all this stuff didn't exist before. And some of the first podcast mic, they say, I got a podcast mic. And they're like, what is that? And ironically, podcast mics, cost as much as other good mics, and, that's, all that kind of stuff. So it's a relative price thing there. So there's just a few clues there to get you started.
Yeah, thanks for the question, David. Austin, go ahead.
So I was listening to what you're talking about with procuring sales, and you said something to me which prompted me to think of a question. So you said something like, oh, another application for, that does AI for a dentist to buy. That made me think, is there starting to be fatigue in these like AI, and I'm doing like quotes with my finger, like AI applications? And what, in your opinion, is kind of the current market for these like AI applications that are solving problems for businesses?
The best way to think about it, and I've got another podcast from last month, Dave Evans, who talks about the impact of AI for AI-oriented solutions, and then AI as features in a SaaS product, and where's all that at? There is software buyer fatigue in general. We're all fatigued with buying and all the ads and everybody chasing us and doing this stuff. There's SaaS fatigue inside big companies. There's, hey, this is magic software fatigue. Hey, there's AI fatigue. So there's a lot of, there's a sales and marketing fatigue. Stop emailing me. Stop outbounding me. Stop showing it, So generally with, people don't want your software. They want their problem solved. I would just stick to the story about the amazing value that you're going to get. And people care less about where it's stored and where's the data and how you did it and what kind of code did you use and is that a SQL statement and you use AI or whatever. Like this AI stuff, it's like I press a button and here's an image, and then I make two more things and I get a song. And it's like, oh my God, right? It's just, this is the magic of software. This is why I'm in the software business and not the hamburger business, is we can make this magic happen year after year after year, and it's still freaking magic. So make some magic and value to them. But yes, there's about 1 trillion AI tools for sales and marketing these days. One way to cut through that, by the way, is to be just for somebody. Like I'm just for practical founders, and there's a prism on that, and right. So there's a fatigue about all this startup content, and endless stuff. But I cut through that by saying I'm just for this industry. So vertical people who can talk turkey and help people sort it out and be helpful, get a big audience, and so there's all kinds of ways to do it there. But yeah, so yes, you can code it, and yes, it's kind of magical. But the bar of how much value and how you can cut through the noise is way higher because the crowd's there.
Thank you.
Yeah.
Yep. Thanks for
Fair
the great
warning.
questions.
Yeah.
Well, I think we're right up on time, but Greg, I want to thank you once again for taking the time to do this and sharing all your great insights. Every time I talk to you, like I learn something, I'm thinking about something new. So really appreciate that. Thank you everyone in the audience for coming. Next week, we're doing a live podcast event. I'll be interviewing YouTuber Louis Serrano, who is a great YouTuber, talks about AI. So really excited about that one. You can register for it on Luma. And Greg just dropped his LinkedIn in the chat, so be sure to check that out. And if you guys have any other follow-up questions for Greg, feel free to DM him and reach out. All right, guys. Well, thanks again for joining. We'll see you in the next one. Take care.
Thanks a bunch.